And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
July the 18th, I'm John Hoagland. Thanks for trusting me with your time. An interesting trading day. We had some pretty decent opportunities, especially near some extremes on some of these opportunities in the equities. Hopefully, some of us were able to find them. I was a little bit late to the party today, ended up having a pretty decent day. A lot of this, I think, has much to do with the NAHB, National Association of Home Builders, release today. The last release was 66. They were looking for 67 today, or the opposite. I forget which is which. I think it was 67 was the last release for June. The July release was looked at 66, and it came out 55. 11 points. That is the largest one-month drop in the index's history, which is a little over 40 years long. Affordability is viewed as the biggest challenge to the home builders right now. 75% of middle-income households say income is falling behind the cost of living. Not good news there. And crude futures close up about 5% today, 99.42 in the September contract, as I think many people would have been expecting after the, failure of our attempt to get the Saudis to provide more crude oil. So we have lots more housing information due out this week. We have the housing starts and permits tomorrow at 8:30 before the open. And on Wednesday, we have existing home sales at 9 a.m. Central. So big focus this week is going to be on the housing sector. We do have some earnings also due out. Let's see if we have our earnings from later in the day here. Let's see what we've got. IBM due out. I don't see that it has come out just yet. We'll check that throughout the session here. And, we got to remember we have some of our bigger earnings coming out later on in the week. As far as what the markets did today, we all know that that failed attempt to get more crude from the Saudis has price pushing higher today rather firmly, again, about 5% higher on the day. The E-mini S&P and the Nasdaq, that upper balance extreme brings no new buyers. We brought all sellers in off of there. And again, I think part of that's due to the housing information that we got a little bit earlier today. Gold, a long overnight inventory, weighs on price, returning basically price right back to value from Friday. The euro price leaks higher as the dollar seems to have found an area of balance it seems pretty comfortable in. The 10-year short time frame range-bound trade just continues. A little bit lower today, but a nice pullback off the low. The natural gas follows suit with crude oil, forming a nice P formation profile today. I'll be very interested to see the open interest in natural gas tomorrow to see if we did the P shape indicates short covering. If we did have short covering today, we should see a drop in open interest tomorrow morning. As always, please make sure you hit that lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the recap. Scott saw your first here. You win the prize. What a profile to end the day. Yeah, you're not kidding. A good start to the week. I guess for opportunity-wise, Tachyon up 11 for the combine. Caught the big move down in the ES, but let it go too soon. Was too focused on making the day positive. And you caught that with the pitchfork. We're gonna see if we have our good friend Matt Hoyt, who has been telling everybody about the pitchfork, and he'll be happy to hear that you got a good trade off of that, I'm sure. Bill Phillips, good afternoon. Vince, good afternoon. Spencer, Jan R., Dan Emmons, good to see you. DA, good afternoon. Finished with up 400 for the combine. Nice job. It was a retest of Friday's 9 a.m. lows. Yes. The market came within 2 points, actually 2 ticks of the low of the regular trading hour session from Friday in the S&P, is just right back down to it. Chilling with Dylan, quit after the gap fill and recovering morning losses. Jaw dropped when I saw the M period low, right? Yep. DA trading, good afternoon. We got to the levels I wanted to be long, but they didn't give me any time to get long and stay long into settlement. So I waited for 38.26 and 11.85 all day. Good patience, Dan. Maybe it didn't work out the way you were looking at. No time on the clock to execute. It does happen. Dr. VJ, good to see you. Frederico. Took half a day off. Shame on me. No, there's nothing wrong with that. Joe Drennan, good to see you. Friday's rip-off 9 a.m. lows were disgusting. This is basically payback. Sure, Apple's bad news was another big catalyst. I don't even see what that bad news was. ES lost the IB low afternoon. Never looked back, 100%. Good afternoon, George. George, Lacey's right here at my feet. I think she's asleep. Hey, Goofy. They say hi. Lacey says hi back. So, why don't we go ahead and jump into the charts? We've got, I personally, I feel like I kind of missed out on some of this move to the downside. Again, I was late to the party, but I managed to find a way in. And I really had to fight myself from thinking that I was going to pick the bottom today. Once that initial balance broke, it was pretty much nothing to do but look for opportunities to sell strength in this market. And I used a volume shoulder that we were discussing in large part in group coaching today to finally get into something to get at least a piece of this move to the downside. So I'm glad I got that. Again, a little late to the party today, but I did manage to turn a pretty decent day today. As far as group coaching is concerned, thanks for joining me today. Hopefully it was a good session. For some reason, the chat was disabled. I've enabled the chat, but there's for some reason, if you want to come to group coaching, you have to register for each one. I don't want that to happen, but I'm not sure I'm going to be able to keep the same link to get into group coaching. So tomorrow, maybe after Wednesday's session, I'll tell everybody this is going to happen, and we may have a new link for group coaching again because I keep screwing it up on Zoom. I'll let you know, and hopefully we'll get everybody in there that wants to be in there and have things run smoothly for the rest of the year as far as group coaching is concerned. Joe, I will let you know what I mean by volume shoulder. It's just something that I look for in directional markets where the market's moving one direction and I'm not in it. I use these to try and get into it, and I will show you that and start with the daily in crude. Now, this wasn't where I got into a move. It was in the S&Ps, and I'll show you where and how I had that opportunity to get in. It's only something that I use when the market is directional, when it's one time framing, when the market is driving one direction. So let's start here with the daily in crude oil. Let me get that up here. And remember, we are in the September contract. All the news is talking about the settlement in the August contract, which is up over $102. We didn't do that in the September contract, thank goodness. So we were looking at the fact that the long and medium time frame structure is to the downside. We had a move down below weekly kickoff low last week that was rejected. We have now a move to the upside today. We're still in a downside structure, although we are looking, technically and fundamentally like that may fall to us at some point soon. We've got this 3 points of contact trend line right about here that's going to come across on the next couple of days. I find that sometimes these trend lines, when they meet with weekly kickoff levels and prices nearby, offers good opportunities. We still are in the middle of the range. We're still in the middle of last week's range. We haven't changed anything all that much. Here's our day from today. We got a P-shaped profile, which indicates perhaps some short covering. Do we still have shorts in the off the bottom here? It's entirely possible that that is the case. If we lose open interest, then this move to the upside may actually end up feeling a little bit hollow. I would, if I was long, I'd much prefer to see an increase in open interest in the numbers tomorrow. And again, we're still in the rollover. They're going to be a little bit blurry, but we're going to do our best to decipher what they mean tomorrow morning. So, we had that huge opening range, like a 70-point opening range, which made it a little too rich for my blood, but it's exactly what we should have done because the market really drove higher for the first couple sessions, first couple half hours of the session, and then just range bound. It really just kind of died up here and kind of found an area that it liked and kind of ranged for the rest of the day. So watch that open interest tomorrow morning. If you check the open interest and we lost open interest, that's going to make this little move to the upside that we had here a little bit hollow. We had this move here on Friday, which was higher, but also a little bit hollow because we lost overall open interest. So are we creating a bear flag here? When we look at the daily chart, doesn't really look like one. This is a pretty substantial range. It's going to be another challenging day tomorrow for us. Here's the S&Ps, largely still range bound. We've got last week's high basically kind of coming across, and now we've got a third point of contact on this upper trend line saying that the highs are still coming in lower over time. We had a hollow rally on Friday in the fact that it was low volume, lost open interest. We test to the high of the area of balance and we reject. Here's what it looked like in the 30-minute chart. Now, this is kind of unnerving for longs, I would say, especially because we had a late spike at the end of the day on Friday. We opened flat out above the late spike, which would indicate acceptance of higher pricing. We opened with a gap that took forever to close today. Remember our gap rules: if we can't close the gap relatively early, then we look to go in the direction of the gap. Now, there was apparently some news about Apple today. I did not see that. And then, like Dan was saying, as soon as we lost the low of the initial balance, we really didn't look back all that much. Now, Joe, the volume shoulders that I'm talking about are when the market becomes directional. Okay, there's very little time spent in this area, and there's little areas of volume and little areas of lacks of volume. Okay, so when the market is directional like this, the low volume nodes I find tend to be, when the market's downside, resistant. When the market's going upside, I find the low volume nodes to be supportive. It was when we got to this level, when price came down here and gave us an opportunity up against this low volume node to take a short to risk, let's call it 70.50, to this high volume node to 73.50. So with 3 points of risk, we were able to get into a move to the downside that continued throughout the day. Here's another volume shoulder. I call them shoulders because what I try to do when the market's moving lower, I try and get the market to come back up to where the up above the high volume node, between the high volume node and the low volume node, kind of a shoulder there. I want to try and get as close to the point of invalidation as I can, so we get the opportunity to see the market get back up here, find resistance in the low volume node, never come back to the upper high volume node, and then we get our continuation to the downside. Now, it's easy to see sometimes when there's only one TPO wide in the market profile, because it means that the market didn't spend a lot of time here. So you get to see in very short time frame where where the high volume nodes to the low volume nodes are in short time frame. You may be able to see these things in a 1 minute or a 5 minute chart, but I find them easier to see in the volume profile. And this is the one thing about volume profile that I like that you don't see in market profile is the volume at price. So you get to see these low volume nodes that sometimes will be resistant as the market comes lower or supportive as the market comes higher. So I call the little volume shoulders, here's a high volume node, here's a low volume node. Anything above that is the volume shoulder where I look for opportunities for execution. All right, Joe? So, boy, oh boy, we've got some scary things in the market. Remember, these equities like to move higher until there's some sort of bad news, and then it's all bets are off. So, Joe, let me know if that makes sense to you. And, there's nothing that works every time. It's just something that I've learned to focus on to try and get into trades that are already in motion, if you will. If the market's already heading lower, find the low volume nodes, try and get when price comes back up towards them on these little shoulders, that's your execution level. If it gets through the low volume node, that's your risk management. Let's take a look at how the Nasdaq worked out today. I didn't really watch too much in the Nasdaq, but I would have to say it would be very similar, right? So we've got this confluence up here. We got last week's high. We got a naked point of control. We got the trend line, which is now holding 3 points of contact. The market looked above the area of balance, didn't find what it was looking for. What was it looking for? It was looking for new buyers. It was looking for new business up there, and it did not get it. Once we took out the low of the initial balance, again, there was Katie bar the door to the downside. We've got lots of nice little volume shoulders here, Joe. Oh, volume shoulder, low volume node, high volume node, high volume node, low volume node. Lots of good opportunities to try and get into this. Again, nothing works every time. I've just found that these little low volume nodes tend to be resistant when the market is moving lower, supportive as the market was moving higher. Shoulder, little shoulder here. 3 or 4 opportunities to try and get into continuation of this to the downside. The one thing I don't want to do is fight it. I'm not going to pick the bottom. I'm not that good, not that smart. I got to find ways into those moves, and they do help. Right back to Friday's low. We still got a little bit of a gap that we have yet to close there. And we've got a couple of naked points of control down below with which to target. It's going to be based on housing and earnings, mixed earnings earlier today. Do we have our... we have IBM. IBM beat expectations on both earnings per share and revenues. Maybe we start to get a little pop here. And there it is. All right. Let's take a quick look at gold. Gold is a pickle these days. It's a little meanie. I got better words for it, but I don't want to say those. Look at the market. I mean, the market is attempting to continue to move lower. How good of a job is it doing? How good of a job is it really doing? We lost 6,200 in open interest on the push to the downside on Friday, but really it starts to look like it's forming an area of balance. Weekly kickoff lows are on either side. Last week's high and low are on either side, rather centrally located. Short time frame control. So the market opens in range above value. We get the drive to the upside. Can't take out the overnight high. Sellers come in and move price back. Where? Towards settlement. We had all these overnight longs here, and when they didn't find what they were looking for against the overnight high, they started looking to the other direction. Seems simple now. Remember how hard it is when it's in real time. We can sit here with our view in the past and say, "Oh yeah, that's obviously what happened." It's so hard in real time to make these decisions. There's duress, there's risk involved. When the market is presenting this way, though, indecisive, market's moving lower, but we don't think it's doing that good a job. We get some good profits. Got to try and take them. Euro. You know, it was last Wednesday or Thursday, my brother said, Euro's too cheap, got to buy it. And to some degree, he is presenting as correct. So we have a small loss in open interest off the low yesterday on Friday. Jesus, on Friday. Is it hollow? Maybe. But we got some continuation to the upside. It looks as though there's been some stabilization in the dollar throughout the day today. Here's the 30. We did not close the gap. We traded to last week's high. Didn't like what we saw up there. Started coming off. We still have a gap below. We've got points of control. We've got naked points of control down below. You see what the dollar does, and like I kind of expected, we've got somewhat of a P-shaped profile. So we may have shaken out the shorts that were hanging on tight, and if that's the case, we've taken some buying power out of the marketplace. See if we have a drop in open interest tomorrow, because that could prove that we've squeezed out all of the sucker shorts, and now it might be time for the market to head back lower. Again, last week's high, unable to provide opportunity to the upside. We go to the other direction. 10-year, this market, woof. Look at this. Tough trade. Open with a gap, close the gap. Resistance at the gap. Resistance at lows, back into the gap, back to close the gap, back in range, no attempt at acceptance inside value. The market just kind of closed at the top here. How do you trade this market? I'm fascinated. I don't know that I could. I've traded them, but in this situation, in this context, I'm finding them very difficult to read. And the natural gas follows suit with crude oil, and we opened above last week's high. We didn't look back. We continued to push higher. What do we see? We see a P-shaped profile. We lost 2,900 in open interest on this push to the upside. I think we're a little bit too short in the hole down here. In this P-shaped profile, if we lost open interest again, indicates short covering, lower open interest, a hollow rally, and we've got weekly kickoff high that looms just above. It looms, it hangs out, it loiters just above price. So Mondays are always slow starts for me. I kind of get the feeling that I'm still in weekend mode. That's why I wasn't real active this morning, even though the nuances in the S&Ps and in the Nasdaq were saying something good was likely to happen. We had the nuances of the late spike to the upside. We had the gap to the upside, indicating acceptance of higher pricing. but we were up against a kind of a major inflection level, and the fact that we were at the highest level we've really kind of traded at in the last four weeks. So when things didn't really continue to move up above I should say up above last week's high, and that trend line, that confluence really kind of threw me off a little bit. I didn't do anything early until we saw that we broke below the initial balance, and that's when I started to kind of get peaked and to say, okay, now I see what's going on here. When we closed the gap and then started finding acceptance inside value from Friday, that looks like a pretty big failure at those highs. If nothing good comes out, I think we may be in a little bit of trouble to the downside. But we're going to have to wait and see. It gives me a little bit more context for Tuesday than I come in with on Mondays, seeing what happened on Monday. Yeah, it's not easy to hop on trends, is it? So hard because you feel like you're selling low. But sometimes that's exactly what we have to do. Sometimes we have to sell low because sometimes selling begets more selling. Same thing on the opposite side. When you feel like you're paying up, sometimes it's the right thing to do because sometimes buying begets more buying. Think about what would have happened if we brought in new buyers above those levels in the S&P and the Nasdaq today, knowing that we have all of those overnight longs, even with the benefit of the knowledge of the nuances, the late spike and the gap and all of that. We had all those longs in there. It makes it difficult to pay a higher price, knowing we're not the first in. We're not the innovators in that case. Steve Roginski saying, yeah, he thinks we're in the beginning of an extended bear market. Can't see any catalyst to buy stocks. Well, Steve, if that's the case, it's going to be a while until I look at my 401k again. But I think, eventually, I think you're right. I think there's more to the downside. But I still have to remain hopeful that eventually things will right themselves and we can go back to doing what we do best, and that's just continuing to grind shorts to a pulp and as we move higher and higher. We got a lot of work to do before then, don't we, Steve? All right. This is a kind of a cool day in history. FDR, Franklin Delano Roosevelt, is nominated for an unprecedented third term as president. He is the only president that has traded for more than 2 terms, and he actually ended up in as president for 4 terms. 4 terms. Today in 1940 is the day he was nominated for his 3rd term. In 1986, the video of the Titanic wreckage was released to the public. Kind of cool. Keeping things positive. 1953, a truck driver named Elvis Presley made his first ever recording when he paid $3.98 at the Memphis Recording Service, singing 2 songs, My Happiness and That's When Your Heartache Begins. The so-called vanity disc was a gift for his mother. It would surface 37 years later as part of RCA's compilation called Elvis, The Great Performances. 1953, the beginning of Elvis. In 1972, on this date, members of Sly and the Family Stone were arrested after police found 2 pounds of marijuana in the group's motor home. And I swear it's personal use only. In 1982, Willie Nelson had the #1 country album with Always on My Mind. It's a good song. that's about all I see here that's that interesting. I didn't really see anybody whose birthday really struck me as far as, well, Jack Irons, drummer who's worked with Pearl Jam, Red Hot Chili Peppers. It's his birthday today. He was born in 1962. He's actually older than I am. Richard Branson of Virgin Records and the Virgin Empire. It's his birthday today. Happy birthday, Richard. He's 72 today. That's about it. So tomorrow, again, we are facing more housing information, housing starts and permits. That's it. No talking feds, not much else. A couple of announcements as far as short time frame bill announcements. And so we're going to be freewheeling and on our own. Freewheeling and on our own tomorrow after housing starts and permits. Should be another interesting one. So get some good rest tonight. Be ready for tomorrow. Be kind to yourself. Be kind to others. Keep praying for world peace. And pray for your own happiness. It's okay to do so. So I will look forward to seeing everybody tomorrow morning on the market forecast, 7:45. Same bad time, same bad channel. I'm always asking for feedback. And if there's any feedback that you have for me about the forecast recap, anything that we do here, don't hesitate to let me know. If you love it, tell me. If you love it, tell everybody. If you something you don't like, something you want to see, tell me. I need to know. If you're trading tonight, make sure you keep some of those bullets for tomorrow. Keep that powder dry. It should be another interesting trading day. So again, get some rest, and I'll see you in the morning. Blessings, everyone.